What if I told you that for millions of black families, the American dream wasn't just out of reach, it was a trap. They were offered a piece of the pie, but the plate was designed to break from the start. This isn't a story about a few bad apples or some isolated incidents. This is the story of a system of predatory lending and financial traps, carefully built over 150 years to pull wealth out of black communities. We're not talking about thousands or even millions of dollars. We're talking about a systematic drain of trillions. This is how our nation's financial institutions, often with the full backing of the government, didn't just deny black America a shot at prosperity. They actively stole it. To get how deep this theft goes, we have to start at the beginning. The year is 1865. The Civil War is over. 4 million formerly enslaved people are now free. It's a moment of breathtaking promise, a chance to finally participate in the economic life of a nation their labor had built for free. And out of this hope, an institution was born, the Freedmen's Savings and Trust Company, chartered by the U.S. Congress itself. Everyone just called it the Freedmen's Bank. Its mission was supposed to be simple: give newly freed African Americans a safe place to deposit their money and build a future. And at first, it looked like the promise was real. The bank was a huge success. Branches opened in 17 states, and black Americans, soldiers, farmers, washerwomen, entrepreneurs, lined up to deposit their first ever wages. They came with pennies, nickels, and dollars, hard-earned money that represented not just work, but belief in America. In just a few years, more than 67,000 people opened accounts. At its peak, the bank held what would be over $80 million in today's money. This was supposed to be the start of black generational wealth. It was a physical building where black families could go to invest in their dreams. But that promise was built on a lie. And the betrayal came quick. And from the inside, the bank's charter had a fatal flaw. It was created by a well-meaning but naive group of white philanthropists, and it required the bank's trustees to be an all-white board. In 1867, new trustees took control, well-connected politicians and speculators. These men didn't see the bank as a sacred trust. They saw it as a pool of cash to be exploited. They got Congress to change the bank's charter, letting them invest the money in more than just super-safe government bonds. Imagine you've hired a security guard to protect your life savings. But then, the guard takes your money to a casino, betting it all on risky ventures, hoping to pocket the winnings. That's what the trustees did. They treated the deposits of tens of thousands of black families like their own personal piggy bank, pouring the money into speculative railroad projects and shady real estate deals. The great Frederick Douglass, who was later brought in to run the bank in a desperate attempt to save it, described the situation perfectly. The bank, he said, had become the black man's cow, but the white man's milk. The wealth of the black community was being milked dry to enrich a corrupt elite. Then came the Panic of 1873, a nationwide financial crisis that made all those casino-style bets worthless. Word spread, and desperate depositors rushed to the branches to get their life savings. By the time Congress finally looked into it, it was too late. Frederick Douglass, who had taken the job without knowing how bad things were, quickly realized he had been married to a corpse. In June 1874, just 9 years after it was created, Congress shut the Freedmen's Bank down. The collapse was catastrophe. Over 60,000 depositors lost more than $3 million, a sum equal to over $77 million today. For countless families, it was everything they had, but the real damage went way beyond the money. This wasn't just some private company that failed. This was an institution chartered by the United States government. The lesson taught to an entire generation of black Americans was that you couldn't trust financial institutions. Even when the government said you could, that deep mistrust has been passed down for generations, shaping the relationship between black America and the banking system to this very day. The first great promise of financial inclusion ended in a devastating betrayal. As the 20th century began, a new promise appeared, this time in the industrial cities of the North. Fleeing the terror of Jim Crow, millions of black families began the Great Migration. They moved to cities like Chicago, Detroit, and New York, looking for jobs, safety, and a better life. And the ultimate symbol of that better life was owning a home. But when they got to these cities, They found the door to that dream slammed shut. They were met with a system of financial apartheid. For white families, the path to homeownership was clear. Conventional low-interest mortgages, often backed by the government. For black families, that path was almost completely blocked. Banks simply refused to lend to them. But a group of crafty real estate speculators saw an opportunity in this discrimination. Can't get a mortgage? No problem. They'll offer you something else, something that looked like a dream, but was actually a nightmare. It was called buying on contract. Here's how the trap worked. First, a speculator would use a tactic called blockbusting, creating racist panic to buy homes from white families at a discount. The speculator would then sell that same house to a black family on contract, but at a wildly inflated price, often double what they just paid. Researchers have called this the color tax. A premium black families had to pay just because they were black. But the price was just the beginning. A contract is not mortgage. Think of it like this. A mortgage is like building a house brick by brick. Every payment you make is another brick you own, adding to your equity. A contract was like being a renter who was forced to pay for a new roof and fix the plumbing. You had all the responsibilities of an owner, but you owned none of the bricks. The speculator held the deed. And here's the most vicious part of the trap, the forfeiture clause. If a family missed a single payment, for any reason, a lost job, a medical bill, the speculator could evict them immediately. They would lose the house, the down payment, and every single dollar they had paid. The speculator kept all the money, kept the new roof the family paid for, and then sold the house on contract to another desperate family, starting the whole predatory cycle over again. This wasn't a small-time scam. In Chicago in the 1950s and 60s, it's estimated that 75 to 95% of all homes sold to black families were sold on contract. A landmark study estimated that in those 2 decades, between $3 and $4 billion was stolen from Chicago's black community through this practice alone. That was money that should have been building equity, funding college educations, or starting businesses. Instead, it was a direct transfer of wealth from hard-working black families into the pockets of white speculators. Brave residents did fight back. In Chicago, they formed the Contract Buyers League, organizing payment strikes and suing for fair terms. They won some crucial battles, but they were up against a deeply entrenched system. And that system was about to get a whole lot stronger, thanks to the U.S. government. In the 1930s, during the Great Depression, the U.S. government stepped in to save the housing market. Through agencies like the Federal Housing Administration, FHA, it began ensuring long-term, low-interest mortgages. This government backing made home loans way less risky for banks, kicking off a massive wave of suburban development and creating the American middle class as we know it. For decades, home equity became the single greatest tool for building wealth. But black families were deliberately cut out of this program. This wasn't an accident. It was official policy. The government created color-coded residential security maps for 239 cities to assess mortgage risk. This was the blueprint for what we now call redlining. It was as simple as it was destructive. New, all-white neighborhoods were colored green, meaning best and safe for investment. Neighborhoods where black people lived were colored red, for hazardous. Think of the economy as a garden. The government was giving out free seeds, water, and fertilizer in the form of government-backed loans to create a forest of generational wealth. But redlining was like building a concrete wall around black neighborhoods and cutting off their water supply. Nothing could grow. It turned these communities into financial deserts by design. The consequences were immediate and catastrophic. With no federal backing, banks and lenders refused to issue loans in redlined areas. Credit and investment dried up overnight. Redlining did 3 devastating things. First, it supercharged predatory contract selling. By choking off access to real mortgages, redlining forced black home buyers straight into the arms of speculators. The government's policy created the perfect market for them to thrive. Second, it destroyed property values. Without loans for home improvements, properties fell into disrepair. This lack of investment crushed home values. One study found that over the last 40 years, homeowners in formerly redlined areas have gained 52% less wealth from property value increases. Third, Redlining locked in racial segregation. It created the very ghettos that society then used to justify its own prejudice. These weren't naturally occurring communities. They were financial prisons built by federal policy, leading to underfunded schools, poor city services, and fewer jobs. For over 30 years, redlining was the law of the land. The wealth gap that exists today isn't a mystery. It's a direct result of this policy. The wealth extraction wasn't just happening in the cities. While urban families were being caught in contract traps, black families in the rural South were having their land stolen right out from under them. After the Civil War, the dream for many was land. The promise of 40 acres and a mule spoke to a deep desire for self-sufficiency. And for a little while, they started to achieve it. By 1910, against all odds, black farmers had acquired over 16 million acres of farmland. But what followed was a century-long campaign of theft and intimidation. Researchers now estimate that between 1920 and 1997, black agricultural land ownership dropped by a staggering 90%. This wasn't just market forces at work. It was theft on a massive scale. Sometimes it was just raw violence. But often, the theft was more subtle, disguised as law. One of the most common tricks involved partition sales. Much of the land was passed down as heirs' property, owned in common by all descendants. Imagine a family owned a pie shop for generations. A speculator could find a distant cousin and buy a single crumb of the pie from them. Under the law, that single crumb gave the speculator the right to go to court, force the sale of the entire pie shop, and buy it for cheap, pushing the whole family out. That's how generations of land ownership were destroyed. Discrimination by the U.S. Department of Agriculture, USDA, was also a huge factor. The USDA systematically denied black farmers the loans and assistance that white farmers depended on, often forcing them into foreclosure, where their land was snapped up by white buyers. The scale of this loss is hard to comprehend. A groundbreaking study calculated the compounded value of this lost land and found that from 1920 to 1997, black farmers lost acreage with a present-day value of about $326 billion. Think about that. Over $250 billion in rural land wealth. Gone. That's generations of lost opportunity and stolen inheritances. The Fair Housing Act of 1968 finally made overt redlining illegal. But the plunder didn't stop. It just changed its clothes. The 2008 financial crisis is a perfect, devastating example. In the years before the crash, a new kind of risky loan became common, the subprime mortgage. It was a financial bait-and-switch. Black borrowers with good credit scores, who qualified for safe prime loans, were still far more likely to be steered into expensive, high-risk subprime loans. It was like a mechanic telling a car owner with a perfect engine that they need a complete, risky, and expensive overhaul just to make more money. When the housing bubble burst, the wave of foreclosures wiped out black communities. It was the single largest destruction of black wealth in modern American history. During the Great Recession, black households lost 48% of their wealth, compared to just 26% for white households. But the modern heist goes beyond mortgages. Today, many black neighborhoods are banking deserts. As banks close branches, they've left residents without access to basic financial services, forcing them into a fringe economy of check-cashing outlets, pawn shops, and worst of all, payday lenders. Payday lending is the contract trap of our time. It's like offering a life raft with a hole in it to someone who is drowning. It seems like help, but it's designed to sink you deeper into debt. These lenders offer small loans at insane interest rates, often over 400% APR, trapping borrowers on a financial treadmill where they can never get ahead. It's no surprise that payday loan stores are far more concentrated in black neighborhoods, stripping billions of dollars each year from the communities that can least afford it. From the collapse of the Freedmen's Bank, to the color tax of contract selling, to the government walls of redlining, to the targeted predation of subprime mortgages. Each mechanism, in each era, has served the same purpose: to systematically pull wealth from black communities and transfer it somewhere else. So, how we get to a number like $4 trillion? You start with the stolen dreams of thousands of families in 1874, whose first savings disappeared with the Freedmen's Bank. You add the billions plundered from black families in Chicago and other cities, one predatory housing contract at a time, a color tax that turned homeownership into a wealth-stripping machine. You factor in the generations of wealth that never existed because the U.S. government drew red lines around black neighborhoods, locking them out of the greatest middle-class prosperity engine in American history. You add the compounded value of the nearly 1 million farms and the $326 billion in land that was stripped from black families. Then you layer on the modern predation, the wealth vaporized by targeted subprime lending in the 2008 crash, and the billions drained every year by payday lenders. This wasn't accidental. It was a system, operating for over 150 years, designed to extract wealth. The result is the staggering racial wealth gap we see today. In 2022, the median white household had wealth of over $284,000, while the median black household had just over $44,000. This gap is not a footnote in American history. It is a central ledger. It is a direct, quantifiable legacy of this century-long heist. It is the price of a dream promised, betrayed, and stolen. If you believe this history needs to be known and understood, share this video with someone who needs to see it. This knowledge is the first step. And if you want to keep exploring the hidden systems that shape our world, subscribe for more. Thank you for watching.